Hello, I'm Asif Farouk of Finextra, and I'm here today with Marion Leslie of Thomson Reuters. Marion, thank you for joining me.
Thank you.
So today we'll have a real complete discussion around pricing and reference services, and we'll begin with markets. How much are the markets evolving at the moment?
So there's no doubt that regulatory changes are having a huge impact on the markets right now, particularly in data management, compliance, risk management and reporting. And so regulatory risk itself is posing a huge challenge to our customers. And from all the events I've attended and customer meetings in the Americas and Europe and Asia, I'm really finding that that's a huge area of focus. If we just take some examples, with every new disclosure or rule that's issued, the securities record or the client record extends, which creates new sourcing, management and reporting challenges. So, for example, with FATCA, that requires disclosure of US nationals and other documentation not previously required in the client onboarding process, plus the need to identify whether a security will be a source of US income or whether it will be grandfathered or not under the regulation. Solvency II requires new classification types. French and Italian securities need to be identified whether they're eligible for withholding tax or not. Other securities need to be identified as to whether they can be shorted or not and under what conditions. And now with the Russian sanctions, entities, their affiliates, and even the securities that are issued by those entities need to be clearly identified as to whether they can be held or not by investors. So all of this creates a huge challenge for anyone involved in the financial markets, not only from a regulatory compliance perspective, but from investment decision perspective, dependent on the regulatory guidance for those areas.
Okay, and let's talk about regulation now. Which ones are having the most impact right now, and what's about next year as well?
Okay. Well, it's hard to generalise because there's a vast range of regulation that's being implemented at different timeframes and applying to different areas of the financial services industry, dependent on the relative business activities that a firm undertakes. So, and whilst regulation is having a huge impact on the day-to-day operations, at the same time, there's still an underlying need for organisations to focus on cost reduction, increasing automation and becoming more efficient and effective in their investment and trading decisions. So all that is having a huge impact as well. But in terms of what's happening, in 2015 there'll be new elements of FATCA coming to market. Solvency II will be about testing and dry runs for implementation in January 2016. There'll be new components being implemented for AIFMD, the Market Abuse Directive, MiFID II and the Volcker Rule. So there's a lot coming to the market, but it will have different impacts to different parts of the industry.
So what best practices then have developed?
So I actually think that regulation has driven a lot of best practice and is making huge improvements in risk aggregation, risk management and overall data management capabilities. And some of the things that are being done right now in the industry are things that data management professionals have been trying to do for years, but regulation is actually giving them the catalyst to get the investment and get things done. So the requirements around risk data aggregation mean that organisations need to have an enterprise-wide data management strategy. They need to have enterprise-wide architecture for data management, and it's also resulting in things like the appointments of chief data officers who are helping to own the assets, the content assets across an organisation, which in turn is enabling them to get best value of their investments. And I think in time, and already we're seeing this, it's going to start organisations to be able to drive further insight that they've not been able to have before because of their sort of siloed data management. I think the other point is, if you look at BCBS 239 or some of the thematic reviews coming out of the FCA, for example, around the best practice for outsourcing for asset managers, or the APRA in Australia and its guidance on how to manage valuations providers, all these things is are driving, coming from regulators, but actually providing advice on best practice to the industry. And then sort of the implications of that are you see increasing due diligence meetings for customers with their suppliers of independent valuations, for example, or customers having a far more structured way to evaluate their vendors through quality scorecards and things like that. So I think ultimately it's raising the bar, it's creating a higher standard, but frankly it's something that the industry needed to do anyway. And my expectation is that the benefits of this will really come through greater insight and forward-looking risk assessments, risk management and better trading investment decisions.